of business. Professor Siegel, good to see you this morning. So I guess you're suggesting, look, we're sitting on 13% gain in the S&P on a year-to-date basis, as everybody has remarked. It has been largely driven by a lot of the secular growth stocks that have gotten pretty excitable here. But you actually think the market is registering the likelihood of downside risk to the economy?
Yes, I do, Mike. You know, I sat on CNBC on January 2nd in the morning before the market opened, and I was asked, what do you think the market's going to do, S&P, this year? And I said 10 to 15%. I thought it was going to be the second half more than the first. And yes, total return has been 14.2 to date. Interestingly enough, you take the Russell 2000 or you take almost any value index, and it's been 4%. You know, as we said, I think basically the cyclical stocks are priced for a mild recession right now, and again, I wouldn't be surprised if that happened. And I think as a result, we could get a lot of churn in the second half of this year. You know, silly me thinking, oh, it's going to be the second half, and of course, market looks ahead. It turned out to be the 15% in the first half. But you know, it's hard to see a lot of upside catalysts for the market in the second half of this year. You know, we were talking, you know, you had Tom Lee on the show. You know, I've been saying that inflation basically with current indices has been dead really for 6-8 months, and they're just getting the residuals through on their official indexes, you know, that Powell is so concerned about. And I really think I think it's very likely we're not going to get those 2 increases by the end of the year.
Yeah, as many as even Powell has recognized, you know, keeping rates right here or maybe nudging them a little bit higher if inflation, in fact, is declining quickly. You know, the math says you're actually becoming more restrictive on monetary policy in real terms, right? So I guess the question is, do you think that a mild recession is something that would disturb the markets, given the fact that we've kind of been living with this risk for a year and a half at least? And as you say, if I look at the credit card issuers, you know, anything that's durable goods related, even the auto stocks, the traditional auto stocks, on a 2-year basis, they're down a lot still.
Right. Well, I think, you know, the bright side of a mild recession is that not only will we not get rate increases, but I think there's still, and I've been saying this, even though everyone thinks, oh, there's no possibility that we would get rate decreases by the end of the year. So, yeah, they're not going to like, oh, yeah, there's going to be some softness in some of those earnings. They're going to like, I think, the interest rate consequences of this. You know, a couple things. We all know jobless claims have not been looking good these last 3 months. Elevated. There are going to be 2 more before we get the June report. We're going to see the money supply report again tomorrow. It's going to be, I think, the 12th or 13th consecutive decline in liquidity, in earnings. You know, my feeling is, you know, one thing I was thinking of, that blockbuster home builders housing starts data that we get. And everyone said, oh, yeah, the economy's so fine. But I think about this. Over the last 3 years, home prices have gone up nationwide 50%. Mortgage rates have almost tripled. So that means if you're financing with an 80% mortgage, the cost of home ownership has tripled over the period. And what has happened to real incomes over the last 3 years? Stagnant. So what I see is it's the biggest single component of consumer price index. If you're moving and don't have all that cash in your home, if you're a new home builder, you're not going to have all this cash for consumption, for trips, for cars, for everything else, which is keeping the economy going. So I'm, you know, again, I'm looking at that. We're looking at the student loan payment restarting. We're looking at elevated jobless claims, and I'm not talking about disaster. But, you know, when people are saying, well, what is on that upside, I just don't see as many factors.